Welcome to another real estate market update for the beginning of October, brought to you by Stunning Homes Realty. We like to give you these market updates so you can make an informed decision when you're buying or selling a home. Let's start off with the Cromford Market Index. As you may be aware, we like to look at this because it tells us the ratio between buyers and sellers. Now, as you can see, we went from over 500 in March to about halfway of 300, so 348 for the beginning of October. Now, some people look at this massive drop and say, oh, obviously the market's cooling down. But as you can see, it levels off around 350. And this time last year, it was actually 353. And this time last year, when it was 353, was the highest it had ever been. So people are freaking out saying, it's gonna crash, things gonna slow down. It's gonna be like 2005, 2006 all over again. What happened? The market went nuts. So right now, it feels a lot cooler than 520, so people are saying the market's slowing down. People were freaked out this time last year when it was the same exact way. So again, 520, that means there's about 5.2 buyers for every seller. Right now we're 348, so it's about 3.5 buyers for every single seller. So when people are telling you that the market's slowed down, please share this video with them because we're gonna go over some very specific statistics to share with you how it's not a slowed down market. For the beginning of the month, we had 7,600 active listings, which is down 6% from 8,100 last year, but up 11% from 6,900 last month. Under contract, we're at 11,600, which is down 12% from 13,200 last year, and down 4% from 12,000. Monthly total sales for the entire month of September was 9,400. That's down 3% from 9,600 this time last year, but up 4% from 9,000 last month. Average monthly sales price, we're at $252 per square foot, which is up an incredible 27% from $199 last year. Now, in a normal market, any other year, we would say that's astronomical, that's unsustainable, but we've been saying this number for the last few months, so if you've been paying attention, this should not be a surprise. And we're up 1% from 249 last month. As you may recall, our average sales price was going down because the luxury market has slowed down, which always does when it gets kind of hot. So going back up 1% is kind of consistent with what we expect. And the median sales price last month was $410,000. And if you guys have been paying attention, we've been setting a new record every single month. So that's up 1% from 401,000 last month and up 26% from 327,000 last year. And if you recall, last year, 327,000, we thought that number was crazy. It's continuing to remain crazy. So when people are telling you the market slowed down, there's no indication that the market is slowing down. Now, there are lots of twists and turns in this market. There are a lot of things that are happening inside where the details are really important. So it's still a crazy selling market, but the things that are important is that the iBuyers and the hedge funds are kind of manipulating, maybe that's not the right word, but are making an impact on our market. So Open Door, in August of last year, bought 66 houses. This year, they bought 278 houses. Zillow last year bought 34 houses in August. This year, they bought 253. And OfferPad bought 82 houses last year in August. This year, they bought 152. So OfferPad is the only one that did not take a dramatic slowdown relative to last year. Now, what's really interesting is that all the way through mid-September is that they were buying consistently and then bam, they stopped buying in September. So there's not a lot of details as to what caused all these guys to stop buying. My theory is there's a developer in China that's about to default on an $88 billion loan, right? That's gonna be the biggest default by any company ever. And so it might be spooking Wall Street just a little bit, not to get them to freak out and panic, but just pause and reflect, figure out what's going on with all the money around the world. Now, iBuyers have been buying a lot of houses, right? We said for the last 3 months, they bought 9% of the homes. However, they're not taking the homes away entirely from home buyers. They're just delaying when it's available. So the supply being reduced by iBuyers will actually come back as supply later on. The jump we had in September of 11% might seem high, but again, it was up 25% in July. So relatively speaking, it's not as high as it may appear. And demand has looked strong all the way through September, but it's starting slower in October than normal. We know that when school starts again, we always have this slowdown right before school starts, and then we have this jump back to normal when school resumes. We're slowing down in October. It's curious, just something else to monitor just to see what's going on exactly in the real estate market. And again, for comparison's sake, we have 4,700 active homes in March. We're up to 8,000, and that seems like a huge astronomical jump, but 30,000 homes is a normal market. So we're still far below the necessary supply to meet our ongoing demand for homes for sale. And as I mentioned earlier, there's a lot of nuances in what's going on. Homes purchased by investors, hedge funds, out-of-state buyers up 77% year over year. And forbearance seems to be the hot topic. Every guru is telling you that this forbearance is going to crush the market. You might see these in your YouTube ads. The reality is there are 4.76 million homes in forbearance in the beginning of the year, which, a lot of people were dabbling, see what this forbearance will do. A lot of them got current. There's actually only 1.6 million homes in forbearance compared to 4.8 earlier this year. And we know through surveys, through what a lot of the banking associations are showing, 80% of the homeowners will actually end up staying in the home. So it's really only 20% of the homes of people that went into forbearance actually will have to sell, but everyone's got equity. As you heard earlier, we've appreciated 27% year over year. So no one's in a financial distress where they need to sell it fast. Everyone has equity, everyone can list it with a realtor. And so there's not gonna be this massive supply. But even if we had all these homes hit the market on the same exact day, which it won't, 20% of the 1.6 million people that are still in forbearance, divided across all the populations across the entire country, that means there'll be 6,400 homes for sale in our market. But we sell 11,000 to 14,000 every single month here. That 6,700, that 6,000 will be half, and that's assuming they all go on the market at the same time, which of course we know they won't. Back in June, the average home that sold for 1.8% over asking price. Now we're at 0.26%. So it's still selling for over asking price. And as far as percentage of homes that sold for asking price, back in June, 60% of homes that closed sold for asking price. Last month, 47%. And finally, the median over asking price back earlier this year was 20,000. So if a home was listed for 300, the median home sold for 320. Today, the median difference is 11,000. So if a home was listed for 300, it'll sell for 311. As I've been saying over and over again, a lot of people are saying that this slowdown is going to continue to get worse. As you can see, we're still a very hot market, right? This time last year, this time right now, we're at the same temperature. So even though we're not as hot as it was in March, this time last year was the craziest it's ever been. Up until that point in time, we're back to that point. So we're still at 350. We're still at 3.5 buyers for every single seller. There's no reason why things will crash. As a matter of fact, we're anticipating, according to industry experts, that we're gonna have continued appreciation, not just to finish this year, but probably all the way through 2022. If you're waiting to buy, you're waiting for this market to slow down, I'm not exactly sure what you're waiting for because it's gonna continue to get more expensive. And if you're thinking about selling, boy, now's a great time because there's still too many buyers for every single home for sale. If you're in the market to buy or sell, make sure you got a professional to work with you. If you got a professional you're working with, that's fantastic. If you need some help, over here at Stunning Homes Realty, we'd love to work with you. If you get value today, or if there's someone that you think could benefit from this, please share this with them so that they'll be informed when they're looking to buy or sell.